Welcome everybody to another 144 Analytics video on how to use the Fibonacci retracements with the 144 rules and guidelines. What I want to go over briefly is just what each retracement does. A 23% retracement usually tells us the market's either very strong or very weak, if that's all it can set back each time, and you should look for new lows after that or highs depending on which direction you're going. 38% retracement is what you need to hold in order to keep the current trend intact. 61.8 is market, usually where the market gets choppy, and 61.8 retracement can send you 61.8 where it just came from. Now the 78.6 retracement is a really interesting one, and that is that this is where a lot of bull markets end and they begin. And you can take them on all different levels, every time frames and that. So here in the wheat, we're just going to show you a couple of those happening, and more importantly, this in how the market changes trend. So this is just classic with the Fibonacci retracements and the 144 rules and guidelines. As you see here, wheat has been in a downtrend for well over a year, and the last big high up here hit 23% back to the contract high. Now, just because we think it should go to a new low, we always watch every retracement on every move just to see how weak or strong the market really is, regardless of what is happening or what a certain retracement says it should do. So in this case, you can see here 38% had one close under it, got right back above it. And as always, we want to see two consecutive, whether it's lower in a row or higher in a row, in order to violate this the level. So 38% held, which meant this trend here going up, even though it's minor, was intact. Now again, watching all the retracements, we look at the 78.6 going back up, and you can see this is where the market failed to make a new high in the area of a 78.6 retracement. And this is, as we just said before, this is where a lot of bull markets end and begin. Now this is just all in this movement right here. It wasn't some grand bull market that was ended, but it's just this move now ended here, and you can see the market just starts to come off from that level after failing to make that new high. Now we come back down here, and this move, this low here, first retracement up, 38.2%. Again, that's what it needed to stay under to keep the downtrend intact. What did it do? Went down to a new low here. You can see it stayed well under 38% here, keeping the market negative, and a new low did follow. Now we take it back down to this new low, and then 38% back up, exactly where it hit, came down, and we would be looking for a new low off of this. But as I just said, we're watching every retracement on all these moves just to see. And anytime it fails to make that new low in the area of a 78.6 retracement is where now the market changed. And this is just a classic thing that happens, and it's in all markets. It's a very important thing to watch. Just as it ended it up here, it started the next move. So here we have it that it failed. So this was the possibility that we finally can turn this trend. Now, how are we going to follow it? We're going to watch the 38.2% retracement on the setbacks. And as you can see here, we had to close under it, back above it, under it, back above it, right, not even under it, then still holding it. And then that kept this current leg up positive. And that's what we should be looking for, new all-time highs, or on that one, new highs for this leg. So here we have now what's a target up on top here, but 78.6%. It hit 61.8 in here, and then went back and only could go. It didn't go 61.8 the other way. Again, it held the trend, 38%. So Now from this 78.6, we could see it go all the way 78.6 the other way. But in this case here, all it could do was hold above 38%, keeping this trend intact, and on we go. And we finally made a higher high in over a year in this market, and that we are looking for this trend to continue. Again, we're not just blindly saying that, we're going to watch the retracements. And as you can see here, 23% would mean the market was extremely strong. So if it held 561 in here, and then the market should quickly go to a new high, and then we'll have retracements up above here that we'll be looking for, all based on the same rules and guidelines. And the only thing that's going to turn this trend negative is if the 38% gets taken out. Now that's with any new high, and that's what you've got to watch right now. So hopefully this just shows you, I mean, why this is so important to 144 analytics, because you can just see the flow of the market. And as we always say, we believe it is the underlying structure of all markets, and you can apply these exact same rules here to any market, any stock, bond, you name it, Bitcoin, gold. It's all the same, and it adheres to the same rules. So if you like this video, please give us a thumbs up. Even better would be that you became a 144 Analytics Premium member for our weekly grain and livestock update. You can get the link here on this, and please give us a thumbs up, and even become a subscriber to our YouTube channel as well. So we hope you enjoyed this video, and see you soon.